Well, so I think we'll get going. Paul, you're on the call. Paul Smith is the head of sales and marketing. Paul, do you want to make any sort of introductory comments?
But just to say that in the last couple of months we've done a lot of work to build some of our company structure. Myself being one of them, Jeremy Nichols, who is our new head of training and support, and we wanted to just get our webinar series back up and running again. And as you just mentioned to Rose a moment ago, trying to create broader market awareness. Not just amongst our current users, which we value tremendously, but also to other planners out there that do an important job. And I'll just kind of leave it at that.
Okay. So let's begin. From the email that I sent yesterday in our newsletter, actually that went out a week ago, we talked about the webinar today and some of the things that we're going to cover. And one of the things that I actually want to start with is something that we call the ideal planning candidate software. And this is very different. So I brought up our website. And if you were to go to the marketing page of the website.
Now joining Snigdha.
What you would see on the website is, on the marketing page, is something we call ideal planning candidates. And you'll notice there's a little program which you can download for free. And then there's also a PDF file, and it explains the concept behind the ideal planning candidate software. And it's also acts like a little how-to manual, shows you how to use it. And it's very simple. What we tend to do as advisors when we're screening for clients or prospects is we tend to focus on wealth. It's, a fairly easy thing to measure, if you will. But just because somebody has wealth doesn't necessarily mean that they're really suited to planning. So we've developed another tool, which really is something that's taken out of our VisionWorks software. And I'm just going to open it up. It's called the Ideal Planning Candidate software. And if I just open this, what I want to do is show you a little questionnaire. This has, sorry, let me get it a good size. This has 9 very simple statements. The first one, I like to discuss investments. And it's something that you can send out to people, and then, they respond however they respond and send it back to you. And where this originates from is that in our software, we do something about what we call financial attitudes. And we measure 9 attitudes. So there's a questionnaire in our software that has 27 statements on it, 3 statements per attitude. And what we've found over the years as people worked with it is that there were 3 attitudes that really determined how much or to what degree clients really embraced the planning process. So what we did was we took the 9 statements and the 3 attitudes that really determine that, and we created this little screening tool. So I'm just going to bring it up now and show you how it works. So you would download this onto your computer, and then you'd send out the questionnaire to somebody, and once it's returned, you just run the software, click the add button, put in somebody's name, and then just double-click on the statements, and then enter their responses. So I'm just going to go back to Bill and show you his responses. So I like to discuss investments, yes, luck is something you make yourself, and so on. And what those 9 statements do is that they distill down into these 3 attitudes. And the 3 attitudes are very simple. Accountability says the results I get in life are up to me. So the way this works is it's based on a national survey that we did. 2,000 respondents, coast to coast, full demographic. Actually, we didn't do it. We had a company that do it for us. And what you see here are the national average low and high boundary scores for the average range. So the client score is placed either above average, within the average range, or below average. So in the case of accountability, the results I get in life are up to me. Somebody that has a very high average or above average score is saying, I really determine my fate in life. And they're ideally suited to do planning. The way they perceive planning is anything that I can do to help me get what I want in life is a good thing to do. Planning is a good thing to do. Somebody who has a low score, by comparison, would say, no matter what I do, at the end of the day, fate or luck will deal me the hand I get. So from their point of view, planning is just a waste of time. Participation, how actively involved are you in the management of money? And the reason this is important is very simple. We all know what happens in the planning process. We give people questionnaires, and sometimes it's painful to get good data back from people. So somebody with a low score tends to be a person who organizes their affairs in a shoebox, and trying to get a data gathering questionnaire in from them is challenging.
Now joining, name not recorded.
Learning is when I learn, I do something about it. It's all about implementation. So we can see that Bill's got a good accountability score, a below average participation score, and an above average learning score. Now, if we were to switch to Sue, Bill's wife, what we find is that her accountability score is low, her learning score is low, but her participation score is actually, kind of high average. So what you see down for the aggregate is the better score for each of them. So we see, Bill is probably the person with the high accountability score who's actually going to drive the couple into the planning process. But when we're actually dealing with them, and we have a data gathering questionnaire that we need completed, we'd really focus on Sue as being the person who's most likely to get that done. And then when it comes to implementation, it's Bill's score that's the high score. So I wanted to start today because it kind of precedes what we want to talk about. In other words, it's not just what tools do we have in our software, so to speak, to help get clients engaged, but it's also, this is really about the willingness of people to engage. So what you'll find is that if you were to use this, this will give you substantial insights into the nature of people and, really whether they're truly suited to having a proper plan done. Anybody have any questions about that before we look at the main topics for today? Okay. So in VisionWorks, just for those of you who are looking at it for the first time, we actually have two interface styles. And I won't get into a lot of depth on this today just because of time. But I've opened it up to what we call the menu-driven interface. It's more or less what I will also call a life planning style, a financial planning style. So the typical approach to financial planning is give clients a data gathering questionnaire at the beginning of the process, have a goals conversation with them. They complete the questionnaire, return it, and then what we do is we sit down, plug in all of their information, all of their goals, and ultimately create the plan for the client, and then meet with the client and deliver the financial plan. So just to show you how this works, I'm going to go to the About page. Today we'll talk Bill, Sue, and Bill Jr. It just makes our conversation easy. And if we were to go to the entries page, and as an example, if Bill, for instance, has an RRSP and we wanted to enter it, we just drag and drop the RSP button onto the tree view, and then we would go to the RSP and we begin to populate it. What was the earned income last year? Are there any unused RSP deductions? Who are the beneficiaries for the RRSP? What kind of contributions does Bill intend to make? And so on and so on. So this is kind of put in the entry, put in the data. A very sort of standard approach when we're creating a plan for the client. What we wanted to focus on today was a very different way of working with people. So I'm going to switch to our life planning interface. And you can switch back and forth between the two. If I go to the About page, again, we have Bill, Sue, Bill Jr. But in the life planning approach, we take a very different start to the process. Rather than giving people a data gathering questionnaire, we actually move that to the middle of the process. And the way we begin is actually with a very simple exercise on people's values. All of these, by the way, are set at the number 5 position to begin. And what we would do is we would say to clients, we would send them out a values form. There are 20 values on it. We would send one to Bill, one to Sue. They have different values. And all we'd say to them is, your only homework before our first planning meeting is to look over the 20 values and check off how important each one is to you, and then to bring that to the first meeting. So this is very light, very easy beginning to the process in order to get them engaged. And the reason that we do this, there are a number of them, but one of them is that our belief is that most people's perception of planning is that it can be a fairly onerous task. There's a long questionnaire to complete. I don't like questionnaires. We're going to have multiple meetings. I'm going to be highly numbers focused. I'm going to end up with a big report that is just filled with tables and tables of numbers that are going to make my eyes swim, and so on and so on. So a lot of resistance to planning just because of people's perception. So what we want to do is we want to shift their perception so that they begin to see that planning is not about numbers. Planning is, in fact, planning for what's important for them, their values, and then the things that they want to have and do in life. So we begin as a soft start with this exercise on values. And in the first meeting, all we would say to people is, how did you rank the different values? So Bill, as an example, might say, giving Bill Jr. a great education is a great start in life. It's really important to me. The first value is academics. So make academics a 10. So we just drag it up to the 10 position. And one of the things that happens in the course of this conversation is that people tell us how to rank a value, and they tend to say because. And the because is when they explain themselves. And in the process of explaining themselves, they feel we now better understand them. So this is intended as a soft start to the process. It's intended to get people thinking about what's really important to them, to engage them, which is our theme today, client discovery and engagement, to engage them in the planning process at a completely different level than the standard fill out a questionnaire, we're interested in your numbers level. As far as the values are concerned, just to give you a little background, we didn't make these up. We worked with a lady whose whole thing in life is values, and she's identified about 55 of them. We didn't include a number of them that we just didn't feel were relevant, a value like world peace. And then the nuances between some of the values were very subtle. So we worked with her to combine definitions for some of the values into a single definition so we could get it down to a manageable number of values, 20. The other thing I want to point out is that we also work with a man at the University of Toronto, a PhD in ethics, a professor in ethics. And he helped us understand a distinction between principles. One of the great examples that's always used about principles is the Declaration of Independence. Virtues, which are things like honesty and integrity, and then true values. And the values that we are using would all qualify as being proper values. And the reason for this distinction is very simple. Values are what I'm going to call opinion neutral, and people often confuse virtues and values. One of my values is honesty. Well, that's in fact a virtue. So obviously we don't want to deal with people who are dishonest, but when it comes to values, when I say they're opinion neutral, what I mean by that is this. We're dealing with a couple who want to enjoy life, do a great deal of traveling while they're young and healthy, and whose view of life is, well, as long as we accumulate enough to be comfortable in retirement, we'll be able to sit back and enjoy watching the movies from all the wonderful places we've traveled in life. That's their take on life. That's the way they want to live life. So we can't really have an opinion about that. All we can do in the planning process is help them figure out how to have the life that, that they want to enjoy. So we may have opinions about virtues, don't want to deal with somebody who's dishonest, but values are really something where we should be opinion neutral. So one of the great advantages in starting off this way is not only is it a soft start to engage people, but as we go through and they start talking about their wants in life, the things they want to have and do, we also better understand how those wants are based on their values. I'm not going to show this to you today, but we also have a way of tying this values work back in a very practical way. We're able to take values, match them with people's wants. We can match academics and education entries for Bill Jr., and then later in the process, when we're looking at output, if there's a financial shortfall, the software actually presents a list of people's values, people's wants, ranked in terms of their values, and it shows the lifetime cost of a want. So if adjustments need to be made, we can very easily identify the things that are most expensive and least important to people. They're obviously the candidates that we should be looking at as far as change is concerned. Does anybody have any comments on values, or Paul, or do you want to add anything?
Hi, Michael.
Yeah.
I was on self-toggle there, so no, I'm good with what I'm seeing. Thanks.
Okay. So let's go to vision. Now, this is one of the things that distinguishes what we do with this whole life planning approach over the standard financial planning approach. What we've been taught to do for years, of course, is to sit down with people and have a goals conversation. In our life planning approach, we actually use the software interactively with clients. And I'm going to talk a little bit about why we do that. But to begin, we all know the experience we have when we sit down with clients and we say, let's talk goals. Some of the time you get a blank stare, and I would suggest that you would be extremely lucky if somebody actually gave you a half a dozen truly actionable wants in life. So I don't mean, we want to retire comfortably. I'll call that a sentiment, that we can't actually act on that. We can act on things like we want to buy a Sunbelt home or whatever it might be. So what ends up happening when we have that initial goals conversation, we get what we get from clients, and then we have to ask questions. So we say to people, well, have you thought about this, and what about that, and so on. And without getting into any detail about it, it all has to do with how thoughts we've had in the past are actually stored in our brain. And the bottom line is that they're dormant unless they're stimulated. And they need to be dormant because otherwise all of our past thoughts would be active in our brain at once, and that would be chaotic. So when you ask somebody, let's talk about your wants, your goals in life, nothing is actually stimulating their thinking, and that's the reason we have to ask questions. Now, the problem is that the whole ask a question, think about it, respond, the whole verbal approach is actually quite slow. And further, the responses we get from people are going to be directly related to the questions that we ask. So considering that we could be dealing with a very wide range of people, we could be dealing with a young couple, we could be dealing with a retired couple, we could be dealing with a retired couple with grandchildren. It's just a whole host of different circumstances. It would be virtually impossible for us to figure out all the questions that we might ask for that very diverse and wide range of people. So here's what happens with the visual approach. All we do is we sit down in front of somebody and we say, we're going to look at 4 areas of life: home, lifestyle, family, career. And what I'd like you to do is identify the things you have and do now and would like to have and do in the future. In other words, we're going to create life as it is today and life as you want it to be going forward. And the reason we frame it that way is very simple. Many of the things we do today are things we want to continue to do in the future. I take a winter vacation every winter. I took one this year. I want to take one every year. So the way the software works is very simple. I've used the house button, created their home, called it 6 Hour Street, and then Bill and Sue looked over this lower group of buttons for examples. They saw renovation, and they said, oh, we want to renovate the kitchen. Or just as an example, they might say, well, one day when we retire, we'd like to buy a Sunbelt home. So we just drag and drop it onto the tree view. So the reason that this works is that anything we see automatically stimulates past thoughts. So this whole approach is much faster, much simpler, much easier on clients, much more thorough, and it's almost game-like. If I go on to lifestyle, for example, we might talk entertainment entries, ballet, concerts, symphony, golf clubs, or if we go to vacations, what kind of vacations do you like to take? Winter vacation, summer vacation, special. That might be a retirement vacation or a wedding anniversary vacation. Or if we go to vehicles, for instance, what kind of vehicles do you drive now or might want to drive in the future? So just to give you an example, I doubt that we would, in talking with clients, we might talk vehicles. What do you drive? Oh, we drive a sport utility. But I doubt we'd ever go through the whole list and say, well, what about cars, vans, sports cars, trucks, motorcycles, snowmobiles, motorhomes, and so on. Client, on the other hand, can look over the array of choices very quickly and say, oh, motorhome. Throw in a motorhome. We've talked about one in retirement. So this approach, this visually stimulating approach, is just far more likely for us to be able to really draw out from people all of the things that they thought about in the past that they'd like to have included in the plan, at least on a preliminary basis for exploration. I want to give you one other example of this. I'm going to go to Bill Jr. All plans always talk about educating children, but essentially they treat children as if, once graduated from university, once educated, that our financial involvement ends. And anybody who's a parent with a graduated child knows that's just not the case in life. So we can go to gifts, and we might talk about help with their first car, help furnishing their first apartment. Notice the wedding. So, for example, if a couple has a few children, if we neglect the wedding costs, we're actually going to overstate their capital accumulation for retirement, and our numbers are not going to be accurate. So we need to throw in the wedding cost as a way of making sure that that expense has been accounted for. But the other thing that's very interesting about all of this, When people look at these symbols and their thoughts are stimulated, the way the brain actually works is we think in terms of mental pictures. So if there's a child, they see wedding, they will actually have a mental image that will flash through their brains of that child's wedding. They'll actually have a picture of it. Now, what's interesting about all of this is that the area of the brain responsible for constructing our mental images is also very tightly linked to the area of the brain involved with our emotions. So people have a mental image and simultaneously experience an emotion. And that's part of what we mean by client discovery. It's not only drawing these things out from people, but it's also what we mean by client engagement. We're now engaging people in the planning process, not just at a numbers level, but I think ultimately, more importantly, on an emotional basis. Any questions about what we covered? So I want to go back to home for a moment. I created a Sunbelt home. Yes, Phil.
How do we draw the differentiation between the wants and needs of today versus maybe something on a bucket list that might happen 20 years later?
Well, we're going to put everything in, but when it comes to how much and when, which is what I was about to get to, that, you know, the bucket list that's 20 years from now, it may be the Sunbelt home. We want to buy a Sunbelt home, which may be 20 years from now. So the 20 years from now concept comes when we start talking about details, which I was just about to get to.
Okay.
So here's the thing. You remember when I showed you that menu-driven or financial planning interface at the beginning? I showed you how we can create an entry. We went to the RRSP. We can create an entry and simultaneously populate it with numbers. So you remember I showed you the RSP and there were all the entries for contributions and beneficiaries and so on. You'll notice here with life planning, all we did was we created the entry. We didn't put in any numbers. And this is a very big distinction over sort of the goals conversation we would typically have with people. In that conversation, we would say, what do you want? When do you want it? What else would, you know, what would it cost? What else do you want? When do you want that? What would that cost? The life planning approach, we don't do that. And the reason is that the area of the brain involved with thinking about the future, you know, imagining our wants in life, we'd like a Sunbelt home someday, is completely different from the area of the brain that processes numbers. So if we say to somebody, what do you want? Oh, we want a Sunbelt home. When do you want it, and what do you think it'll cost? What else do you want? When do you want that? What do you think that will cost? We're actually bouncing their brains continuously between two different forms of thinking. And it quite literally tires the brain. So when we're doing the vision work, it's actually a free-flowing conversation just about our pictures of life, just about the things we'd like to have and do. And then later, under details, we'll actually come back, switch the style of thinking, and start to put the numbers around the whens and the how. Again, this is, you know, a very different style of working with people, but everything that we do, the visual stimulation for the thoughts, the separation of the thinking about those thoughts, the wants in life, and populating them with numbers, all of this is really ties back to how our brains work. So it actually is something which is very easy for people to do. It's in a sense, I'm going to call it very natural. Just to show you how we would continue in this first meeting, once we've drawn out from them their pictures of life, their wants, if you will, the next thing we do is we go to financials. And financials includes things like, you know, portfolios they have, TFSAs. So just, again, look over the different choices and identify what it is you have right now. What's your financial situation, your financial starting point? So if I go to pensions, again, you know, Bill might have a couple of RSPs. I'd create them. And once again, no numbers, just what applies to you. I have 2 RSPs, drag and drop the button twice. Or if we go back to other, it's a collection of all sorts of other assets, rental properties, whatever it might be. Or if I were to click other assets, you can see stock option plans and employee share purchase plans. Whatever your financial situation is, just identify what you've got. Again, no numbers, just, what do you have? When we go on to details, the first thing that I want to point out to you is you may recall that I had said at the beginning that we don't start with the data gathering questionnaire, that we move it to the middle of the process. So the normal approach to planning, what you would have is what I'm going to call a generic questionnaire. It's a questionnaire that you've developed, you send to virtually all clients, and then clients need to go through and enter whatever data applies to them. The issue is that the more robust the software, the more software is able to model clients' pictures of the future or a financial situation, then the longer the questionnaire. Because the questionnaire would literally have to have a question on it for everything that the software could handle. And then that would be extraordinarily long, and we all know what happens with long questionnaires. None of us like to complete questionnaires. So the way our software works in this life planning flow of the conversation is we use the buttons on vision and financials to create the entries that apply to the client. And then when we go to the data tab, print questions, when I bring up print preview to look at this questionnaire, what you're going to see is that for Bill and Sue, there are a couple of default questions about wills and tax returns. But when I move on to join, notice that there's now a question about the Sunbelt home. So the way the software operates is that as we use the buttons on the vision page to capture what applies to the client, and on the financials page to capture their current financial situation, the software is actually populating a customized questionnaire in the background. And that ensures that we have the most robust software possible, can virtually model anything, but we also keep questionnaires short. Every question on the questionnaire applies to that particular client. There's one more thing that we do, which is optional, but which we really encourage advisors to do in this sort of first meeting that we're having with clients, is we actually, if you notice the legend down here, is we make a distinction between a vision entry and a hard data entry. So a vision entry would represent, buying the Sunbelt home when we retire, or it might be, when you want to replace your next car, how much you want to spend on that car, how often you want to replace cars, might be what you would like to spend on your winter vacations, things like that, how much you want to spend on a kitchen renovation. Hard data entries, on the other hand, are pure statements of fact. What do you pay for property taxes? What are your operating expenses for your house? What are the terms of your defined benefit plan at work? Things of that nature. So we actually separate them on the details page, and our recommendation to advisors is to go in and to populate the vision entries with people. So we've used the buttons on vision and financials to create the entries that apply to the client, and then all we do is go to details, the vision page, switch the style of thinking, and say, when did you want to buy the Sunbelt home? Well, we want to buy it in 2020. Spend on it. What I want you to know is that little marker in the tree view is in blue. And from the legend, you can see the blue says, well, that's a vision entry. But you can also see that anything that turns gray means already quantified. We already have some numbers in for that. So once we put in the purchase date, whatever they expect to spend on it, and click the Save button, I want you to notice the little marker turns gray, meaning already quantified. Now, what happens is if we go back to the questionnaire, the question about, when do you want to buy the Sunbelt home and how much do you want to spend is actually dropped off the questionnaire. So the whole idea here is that, whereas if we go to the data tab, now you can see there are other entries about property taxes, operating expenses, things like that hard data stuff. So the whole experience of the client is, we talked about our vision of life, the things we would like to have and do. We said when we would like to have and do them and how much we think they'll cost. And if anybody's familiar with the acronym SMART, specific, measurable, actionable, relevant, time-related, once we go from, one day we'd like a Sunbelt home, to we would like a Sunbelt home in 2020 when we retire and we expect to spend a certain amount on it, that actually makes that picture in people's minds much clearer. So the whole place that clients arrive in the course of this meeting, which you should be able to accomplish in maybe an hour and 3/4, the whole place that they arrive is we've talked about life, we've talked about when we want to have and do things, and now you're giving us this relatively short questionnaire, and we're going to get it completed and return to you in a timely way for a very, very specific reason, and that's because we're wondering, are we on course to achieve this life we've described? So when we give questionnaires to clients at the beginning of the process, it's almost as if they look at the questionnaire and say, I have to do this questionnaire because Rose wants me to get it done. You know, you're the reason for them doing the questionnaire. Whereas when we move the questionnaire to the middle of the process, we talk about their vision, we talk about what their vision means to them. They're now self-motivated to get the questionnaire completed because they're curious, they're engaged. Are we acting effectively to have this life? And then when we give them that very short questionnaire that's just hard data only, then, you know, it's not a huge task for them to look up the missing data and get it back to us. So what we wanted to do today is we wanted to talk about engaging clients in the planning process. And rather than engaging clients with a goals conversation, which could miss important goals, and because it's verbal, actually is not nearly as effective at stimulating mental images and therefore stimulating clients' emotions. So we wanted to talk about this very different way of, you know, gathering their pictures of life. And we also wanted to introduce the whole concept of values. You know, plans should be based on people's values, what's important to them. They should capture their true vision of life, all the things that they want to have and do. And when we take them through this, there's a very different level of engagement on the part of the client as compared to, you know, what we've often done in the past. So, questions? Anybody have anything that they'd like to throw out?
Michael, how would you handle somebody where you have the husband who may be a business owner and a wife who takes care of the house, and he wants to pull and push and start talking business and corporations? How would you handle that situation?
Well, I think it's a really good question. So I'll just give you a story. I had an advisor who first started to work with the software, and he was dealing with the husband. The wife came to the first planning meeting kicking and screaming because her expectation was that it would be all about numbers. You know, just not what I'm interested in. You know, this is going to be boring for me. They got into the visioning conversation, and the husband said, wait a minute, all of this fluffy stuff is not important to me. Let's get to the numbers. And the wife said, stop. There are things we need to talk about. And in fact, it was about the house. There are things we need to talk about around what we need to do for the house. And so she got engaged. And the answer to the question on a mathematical basis is if we don't get the picture right, the numbers aren't going to be right. So we need to get the picture right. But what it did was it got her equally involved in the planning process. Now, here's the interesting thing, because I had never thought of this before. But what the advisor said to me was, my client is really the husband. And if he were to die, I doubt that I would have retained the family account. You know, the wife could very well have talked to her friends, had some other advisor, you know, recommended to her, whatever it might have been. He said, as a result of this first meeting in which there were equal participants, I developed an equally strong relationship with both of them. Very, very worthwhile point. So yes, you're quite right. You'll get the business person who will say, oh, I don't want to talk about this stuff. Let's get to the numbers. Let's talk about my corporation. Our answer is, if we don't get the spending right, the wants right, then the numbers aren't going to be right. So we need to get these pictures correct. But what you'll find is that it will engage both of them. So, you know, if one wants to get to the numbers, the other is very likely to say, well, there are things we need to be talking about. Does that answer your question?
Yes, it does. Thank you. Yep, thank you.
There's one other thing that I want to show you about, or talk to you about this, because I think it's really important, and it's more or less along this line. In other words, we're dealing with a couple. Now, here's what happens in the normal approach to financial planning. We gather their financial situation through a questionnaire. We have a goals conversation. So the financial information we gather, I'm going to call it the starting point. This is what you've got. The goals conversation, I'm going to call the end point. This is what you want. And in order to create any plan, we need to know what's the start, what's the end. So your financial information through the questionnaire, the start, your goals, the end. Now that I have your start and the end, I will go away and create the plan for you. Now, here's the underlying presumption. The underlying presumption is that when you're dealing with a couple, they 100% agree all the time on the end point, on their goals. And we all know that doesn't happen. So what ends up happening is Bill says, oh, when we retire, I want a Sunbelt home, and Sue says, well, I don't really want a Sunbelt home. Now, in the normal approach to planning, what do? We have to have a conversation about it. We have to try and reconcile their different points of view at the beginning of the process. We need to know the end point so we can go away and create the plan. Is the Sunbelt home in or is it out? So we have this reconcile conversation. We all know what happens. There's a winner, there's a loser. You know, sometimes it can get to be an uncomfortable conversation and so on. So in our approach, what the word I use is rather than reconcile, it's acknowledge. So Bill says, I want a Sunbelt home. Sue says, I don't. And all we do is we say, oh, very simple. What we'll do is we'll add the Sunbelt home, but for now, what we'll do is we'll exclude it. So notice there's a right-click menu with an include, exclude, so we can just exclude that entry for now. So, and then we'll say what we'll do in our next meeting, when we're really looking at all the output, when we can see the full picture, is we can do a what-if scenario. We'll include the Sunbelt home. We'll see what the financial impact is. We'll talk about it then. So when we have that reconcile conversation, which can get uncomfortable, it can also take a lot of time. Whereas when we have an acknowledge conversation, it's very brief. Oh, you have different points of view? That's understandable. Let's just add this, but for now we'll exclude it. So and we'll talk about it in our next meeting. So from Bill's point of view, the Sunbelt home's up for conversation. From Sue's point of view, it's not part of the plan yet. So this is still her plan. The downside would be if we included the Sunbelt home, because this is what often happens, we'll say, well, we'll throw that in, and then if you choose not to do it, you'll simply have more money ultimately. Well, the problem is the Sunbelt home's part of the plan. Sue doesn't buy into it, and she can actually look at the plan and say, this is no longer my plan. And she can mentally drop out of the process. So this ability to include and exclude is a very important feature when we're working with couples. And again, today we didn't want to go so far as to show solutions, but within a single plan, you can create unlimited what-if solutions. So we could have what we call the initial vision. We could create a new solution. We could include the Sunbelt home in it. We can actually go to a compare tab, compare the two solutions side by side. We can actually have an informed conversation rather than an emotional one. Any other questions?
Michael, it's me again. Would you challenge the couple, like when you walk away from that first meeting and say you acknowledge one side and exclude it on the other? Would you challenge them to come back with an answer, or
no,
by delaying it to the next meeting, aren't you going to just resurrect the same old argument?
No, I would not challenge them to come back with an answer. I do not believe that you can make a decision in isolation. Decisions need to be made within the context of the whole. I'll give you another example of something that when I was actually doing this work in the field that came up. Just so you have some idea, what we do was evolved over time. Not only did we speak with a lot of experts on values and adult learning principles, how we learn as adults, and so on, but we actually tried these things in the real world with clients until we found something that was very smooth. And the whole evolution of the software was like peeling back the layers of an onion. There would be something that was clearly, that we struggled with, and then we'd find something that would make that very smooth, very seamless, but then we would see the next thing. So it was just constantly peeling back different layers. One of the things that came up a lot was educating children. So Bill might say, for example, undergraduate, postgraduate, 7 years, anywhere in Canada, $25,000 a year, times 7 years, $175,000. And Sue might say, no. Local university, undergrad only, 4 years, we'll kick in $5,000 a year. The kid can pay the difference, $20,000. Huge difference. So this ability to go in and create one entry, quantify it one way, another entry, quantify it the other way, and then do a what if and include one, exclude the other, gives you, in that second meeting, the ability to see the financial implications within the context of the whole. Trying to make a decision in isolation is based purely on personal opinion. We don't know why Sue wouldn't want to spend, give the child the best education. Maybe somewhere deep in her mind, it's if we spend all the money on education, then, and Bill, you're going to be 6 feet under well before I am, I could end up eating cat food in retirement. We never know what is deep inside people that motivates their thinking. So trying to make a decision in isolation is, all about personal opinion. Whereas when we have a look at it within the context of the whole, we might see that they're accumulating so much wealth that the more extensive education is actually doable. Or Bill might look at it and say, gee, if we spend all that money on education, our retirement is going to be in question. Maybe they end up saying, well, what if it's 4 years at the local university for undergraduate and then 3 years wherever? You get to play with things and understand, their different options within the context of the whole. And that's arriving at what I call a shared vision, rather than one person's opinion, dominating over the other person. And when we have a shared vision of life, what we end up with is both oars in the water pulling in the same direction, which is the only way we move forward. Did that answer that question? Bill?
Yeah, it sure does, Michael. Thank you.
Okay. Anybody else with any other questions or comments? Paul, do you want to wrap up?
Michael, can you hear me okay?
Yes. Rose, yes.
Sorry, I just couldn't get the thing to get off mute. I apologize. Actually, Jeremy and I were talking a little bit, and I have a young couple that I'm working with, and they don't have any children yet, but they are planning for children.
Absolutely. It's sneaker, isn't it?
Yes, it is.
Yeah,
so how
sure.
do we actually, create that scenario?
Easy.
Children are not here yet. So I'm putting in the dates and
yeah.
Okay.
You go to the About page, click the Add button.
Mm-hmm.
We're going to add a household party, a child who's a dependent. We're going to make it child 1,
Mm-hmm.
and then gender doesn't matter. And when it comes to date of birth, we can just make it any year in the future. We figure we'll have that child in a couple of years.
Yeah.
Life expectancy isn't particularly relevant. Click Finish. I'm not going to reset the estate beneficiaries. Now we've created a new child, and when we go to the vision page for that child, we can start talking about, the kind of education we want to provide. And notice that we do things like lessons. Plans often neglect the cost of raising children. Just to give you an example, I had a son who swam, and he swam at a very high level, consistent golds and silvers at the provincial level. And people would say, well, swimming, that's a Speedo. I can get a Speedo for $35. It costs me about $10,000 a year to keep him in the pool.
Exactly.
So you've got a family where they've got a few kids. The kids play hockey. It's extraordinarily expensive. But then this is where values are very important, because that may very well reflect their value called family. We want to do whatever we can for our children, to raise them. We see all of this as being very developmental and, laying a great foundation for them to grow into productive, mature, self-sufficient adults, whatever their picture is in life about all of that. Mm-hmm. So we throw all of this in. Now, it's not only because those kids that play hockey, that may be very central to that family's life. I can remember talking to a new advisor who had done her first plan with a client, and she said they were going through all of this home lifestyle. They got to family, and in fact, they had a few boys who were in hockey, and as soon as they started talking about, sports and hockey, she said they just lit up. That was absolutely central to their family culture, getting up in the mornings, eating right, going to hockey games, totally central to their family culture. And their emotional engagement, their enthusiasm just came alive when they started to talk about it. And that's what made the whole plan relevant to them. So you can create children in the future. You can talk about them because we have pictures of how we would like to be able to raise our children, whether they're children that we have now or children that we will have in the future. It doesn't matter. We want to educate them. We want to give them opportunities. We can. People will talk about that just as freely as existing children.
But I think the income level and all that will drop while she's on mat leave or thinking of working part-time. So we just model it differently and show them the impact that will have.
Yeah, sure. It's very easy to do. I mean, I could go to Sue and her career income, and maybe Sue's making a certain amount of money now. Now this is an older couple, but I could go in and I'm going to switch the style of graph to what we call a step graph. I could give her zero in, and let me do this in the table. It's easier. I could give her zero income for a certain number of years. And then I could, could go back out into the future, and she's back in the workforce at some point in time. I mean, I can change any of this stuff over time very easily.
Yeah. Okay.
So we can account for all of that quite easily.
Yeah. Okay. So I think Jeremy and I were talking about this morning. I'm seeing them tomorrow, so I want to create at least one more event for them so they can see.
Yeah.
Okay, great. Thank you.
Anybody with any other questions?
Yeah, Mike?
These are all great questions, by the way. How do you deal with children in the future? Fine, put them in. How do you deal with, well, I'll be on maternity leave? Well, fine. Just or drop the income down to zero for a while and then start it again in the future. Easily done.
Mike?
Yes.
Mike, I have a question. When I've input, it's Bob Noseworthy, by the way, when I've input information for an RESP, you do that at the child level, is that correct?
Yes, that's correct.
But when I notice that the contributions, they don't show in the primary client's cash flow. You follow what I mean? So I'm putting it at the child's level, but I don't see it in their cash flow.
Well, you should. If I go in and put in contributions just to throw it in, this is Bill Jr. He's got I'd have to go to terms here. But when I throw it in, if I go to show table, it's showing who is actually making the contributions. That should show in Bill's output.
Oh, okay. Well, then I must. Okay, I see what you're saying now on that one. Now it makes sense to me. Okay.
Okay.
Fair enough.
Let me. When we look at these numbers, by the way, the life planning interface is a conversational flow with people, whereas the menu interface is, the more mechanical. Put in an entry. Put in the numbers around the entry. So if I just go back to Bill here, and I go to 2014 in uses, if we go down to other accounts plans, you can see contribution to the RESP, which is what we just put in, the 40 grand. Okay?
Right.
Now,
okay.
Now, the one thing also is when it comes to withdrawals, if we go to solutions under tactics and we go to Bill Jr., you'll see education. And if we turn on auto withdrawals, what will happen is it will take money out of different sources that we have, and it will deplete those sources before it relies on Bill or Sue as a payer. Okay, so it'll take money out of the RESP first, and then only if there are expenses that can't be covered would Bill or Sue be the payer. Oh, sorry, I have to check that box. My apologies. So it shows the list of potential sources, and then you can see it's all coming out of Bill Jr.'s pot, via the RESP. Bill and Sue are no longer payers. If I get rid of auto withdrawals, then it reverts back to what we did as the original payer, Bill or Sue or whatever. Okay?
Perfect.
Any other questions that anyone might have? Paul, do you want to wrap up?
Sure, yeah. Well, I just wanted to say, of course, thank you, Herbie, that attended today, and we hope we're able to, share with you some knowledge. But I really wanted to kind of speak to the fact that really what we're doing the seminar series for is to really support our clients and to support you with your clients. We know that the product is very powerful with lots of functions and features, but we also wanted to marry the intelligence behind why it exists in terms of things that Michael went through today, the values area, which it wasn't just randomly designed, nor was the process to have a conversation with the client. So we wanted to kind of focus on that. Just wanted to speak as well as that we know the market is increasingly favoring financial planning. This is not just a guess. We know it's sort of statistically, and a lot of research has been done, and it's commonly known. And many of you have spoken to already that are licensed through different dealerships, and we're out knocking on the doors of the executives of these firms, and they're interested. So our goal there is to support you as well, so that ideally we can get the brands that you work under also supporting you as well as us. So that's where I'll leave it for now, and I will pass it back to you, Michael.
Well, I'll just say thank you, and if anybody has any questions that, occur to you at some point, feel free to give me a call or, call our main number, 416-421-2431 or 888-578-3247. They're on our website, by the way, under Contact Us. And then you can either call me at extension 1, call Paul at extension 3, or if you're an existing user, of course, you should know by now to call Jeremy at extension 2. Or you can use 101, 103, 102. So thank you again for your time today, and we look forward to doing everything we can to transition you into life planning and make this a very successful experience for you.
Thank you, Michael.
Thank you very much.
Okay, thanks.
Thank you.